All right, welcome everyone. This is James Allen with Steven Insalaco and Mickey Belt on the Silverside Inside Track. Mickey, the first question, why would a client or prospect ever consider replacing an existing life or annuity contract?
Sure. So as your clients age, their goals are going to change. Their needs are also going to change. So many times when we're talking about this concept with clients of repurposing existing life or annuity contracts, a lot of clients are willing to repurpose their existing contract rather than purchasing a new one, less out-of-pocket money for them. You know, for instance, let's say a client has a permanent life policy, $200,000 death benefit, good amount of cash value within the policy. Many clients are willing to drop that $200,000 maybe to $150,000 or $175,000 if that means they're going to receive substantial long-term care leverage on the back end of that as well. So we can dig into this more later if you'd like.
Yeah, well, what would these new asset-based insurance products provide that their existing contracts may not?
Yeah, so the concept of asset-based insurance seems to be rather new to a lot of people, clients and advisors, but these solutions have been around for about 26 years, gained a lot of momentum over the past few years with traditional long-term care prices increasing, a lot of the rate increases with other carriers, and then also the fact that many carriers are dropping out of the marketplace in entirety. So they're going to provide the clients with a three-bucket approach. Rather than just having that death benefit there, these asset-based products are going to have that return of premium option according to the product's vesting schedule and how we want to set it up. They're going to have an income tax-free death benefit, and then also a nice long-term care pool of money. If they never need long-term care, that income tax-free death benefit is going to pay out to a beneficiary or a loved one. So really not one product that fits every client. So what we do here is what our team does is we shop it out, figure out which product's going to come back best and be most competitive for the client based on a few different things such as source of funds, age, gender, health, and even the premium amount going in.
All right. Well, thanks, Mickey. Steve, who is the target market for potential 1035 exchange opportunities for asset-based insurance?
I would say existing clients that are looking to transition from the accumulation phase to the protection phase. Now, we want to make sure that we're targeting people that, of course, don't need a long-term care now. They need to be able to qualify for it, and that's one of the things that we need to stress, that they're out of that accumulation. They're ready to make sure that if something should happen, that they're protected, but they haven't gotten to that point that maybe they actually need it right this second.
All right, thanks, Steve. And how do advisors implement this concept into their practices?
Well, the biggest thing that an advisor needs to do is talk with their clients. They need to get a full picture of what they're doing, what's in force, why they made the decisions that they did. They need to look at the entire picture rather than just coming in with, hey, I want to offer you an asset product. They need to see, would it even fit? Does it make sense? Does the client have that fear? Do they know what it means? So getting that whole picture and going back to clients that you already have is going to be key in an advisor's success in asset-based insurance.
And Mickey, what are some things that advisors need to prepare for and be cautious of when positioning this concept to their clients, prospects, and just the people they're talking to about this product or this idea?
So three main things that I always stress to clients and advisors as well when they're trying to prepare or looking at these types of 1035 exchange opportunities. First and most importantly, making sure that it's suitable for the client when they're doing those 1035 opportunities, when they're doing those policy reviews. For instance, we wouldn't want to move an existing annuity that has a large surrender penalty, typically looking for annuities that are out of surrender or have a minimal surrender penalty. There are a few exceptions to that, but that's pretty much the general rule. Second, looking at pre-screening clients ahead of time, making sure that they're in good enough health to actually qualify for a new product. Based on their health, we can go a few different ways, either on a life chassis or on an annuity chassis. But, we want to make sure that we're spending their time efficiently, making sure we're not applying for something that they can't qualify for. And then third and finally, the underwriting process on 1035 exchange opportunities can take longer. The fact that we have to request funds from the existing carrier, and then we have to wait patiently on our end until those funds are received. So, there's days and there's some carriers that take 20, 30, 40 days to get that back to us, and there's other ones that take only a few days. So just setting those expectations up front with your clients definitely helps.
All right. Well, thank you, Mickey. Both Steve and Mickey. Mickey first. Can you give us an example of a life and annuity 1035 exchange opportunity that you came across recently?
Sure. So I'll take the life one here. One just came across my desk this afternoon, actually. So it's looking at the notes from when I worked on it. 62-year-old male, existing whole life policy, about $82,000 in cash value, about $140,000 death benefit. We talked with him, and he said if he plans or if he needs long-term care in the future, plans to liquidate or spend down that cash value to pay for those needs. So shopped it out through the market. The Lincoln MoneyGuard product came back best. New death benefit of about $109. So yes, it is about a $31,000 reduction in that regard. But at the same time, we turned that $82,000 of cash value into an initial bucket of $350,000 for long-term care with 3% compound interest. So what that really means is at age 80, when most long-term care claims typically begin, that bucket's grown to over $550,000 of benefits. So it's a win-win situation for the client and the advisor for helping them plan this way.
Steve, have you come across an example of a life or an annuity 1035 exchange opportunity that's come across your desk, or just maybe a challenge that you've seen some of your agents at Silverside Insurance have been coming up against?
Yeah, so one of the cases that came across my desk was a case from California, and anybody that sells life products in California has a really hard time with all of the companies. They don't necessarily have the chronic illness benefits available there. With this particular client, we ended up taking $120,000 of their money. We used the State Life, the Asset Care 3, to reposition their funds. Not only did it increase their death benefit, but it gave them an option to do lifetime benefits. So the client actually, if they get sick, realistically, they're only going to need the care for anywhere from 3 to 8 years. But what if they need that longer? This gave them the option to continue to get the benefits on a lifetime basis.
All right. Mickey, do you have anything else that you just wanted to finalize or summarize at the end of the conversation on existing life and annuity contracts?
I'll be short and to the point. There's just a lot of opportunities, both on the annuity chassis and on the life platform as well. A lot of cash value life policies out there, a lot of out-of-surrender non-qualified annuities that when you ask people, what's the main goal of it or why do you have that policy, a lot of them say, if I need care in the future, I'm going to go to this first. If I don't need care, I'd like to leave it to my kids. So why not repurpose or reposition some of those contracts based on the needs and goals of the clients for the long-term care leverage?
All right. Well, this is James Allen with Steven Insalaco and Mickey Belt talking about repurposing existing life and annuity contracts for meaningful benefits with asset-based insurance on the Silverside Insurance Inside Track.